Jeremy Stretch, senior currency strategist at Rabobank, joins us from his offices in London. Jeremy, good morning. Thanks for joining us. I mean, it seems forever, Jeremy, we've been talking about the US putting pressure on China, to make its currency more flexible. But does pressure work?
No, I think probably it doesn't. It's good for the domestic political arena, and of course you've just indicated the Obama comments during the election campaign. It was good at that time, but I think the pressure itself is relatively counterproductive. And it's not just pressure that we're seeing from the US now. We're seeing it from a very broad international church of institutions suggesting that China should allow its currency to appreciate. But I think it's going to be very much on China's terms. And I think that's the thing that we need to remember. And probably the pressure itself may well even prove to be relatively counterproductive.
Yeah. What's the most we can expect then from China on this front in the next sort of 6 to 12 months?
Well, I think it's going to be a story for the second half of the year rather than the first half, although, of course, we're almost at the end of the first quarter anyway. But I think in the second half of the year, we will see a slight toleration of a strengthening of the currency. But I think it will probably be only something of the magnitude of around 2%, so nothing like the sort of appreciation that we saw after the initial move in 2005. So I think it is going to be a very slow process and probably not enough to appease those US politicians in the short term.
From China to Greece, Jeremy, I mean, the latest sort of quote of the last 24 hours comes from Merkel's chief finance spokesman. He says, Mr. Meister, Greece should turn to the IMF if it needs aid. I mean, doesn't this go against what Trichet, Juncker and Sarkozy's been saying?
I think it does, and I think that underlines the degree of dissension amongst the senior ranks of Eurozone politicians. I think Ms. Merkel is obviously rather hemmed in by the German Constitutional Court and German popular opinion. So I think, in a sense, that's one particular problem. But I think it just underlines the lack of credibility that those plans or lack of detailed plans that we've seen from the Eurozone politicians regarding Greece. And I think that does just open the door once again for further speculation as to ongoing negativity for the single currency.
And of course, until, I suppose, we get concrete measures announced, there will be further pressure. Is that the message? Yes,
I think it is. I think markets like nothing more than a degree of certainty. And of course, whilst the finance ministers may have said there was a plan to deal with the problems of Greece, they wouldn't reveal those plans now and said that they weren't going to be necessary. Well, I think we need to see rather more detail. We really need to see where the money would come from if necessary. And I think by far we're not out of the woods as far as the Greek situation is concerned.
Jim O'Neill, we all know, Jeremy, possibly more famous now for buying football clubs than is his role as an economist at Goldman Sachs. But he had that economist hat on yesterday, and he said that Italy holds the key to the future of the stability of the euro, not Greece. Well, what do you think about that comment?
Well, I think in a sense what he's probably getting at is that as far as Greece is concerned, although the problems are relatively intractable, ultimately, if push came to shove, the problems could be dealt with in terms of pure financial cost. I think probably what he's also suggesting is that if those problems of the fiscal pressures were to explode elsewhere in the Eurozone, and I would probably include Spain as well as Italy in that particular regard, then the sheer scale of those problems on the scale of Italy or Spain would potentially completely overshadow the whole Euro project, and I think that will be a much more systematic and seismic problem for the single currency.
To the UK, Jeremy, it's been quite a good week for sterling, hasn't it? Especially 2 days ago, one report in The Guardian saying that maybe the Tories have got a bigger lead over Labour than other polls are suggesting. We had the positive employment data, or unemployment data, as well. Are things turning for the pound?
Well, I think what we've had is that sterling has been very oversold. Investors have been very bearish on sterling over the course of the last few weeks. Those narrowing opinion polls were clearly part of that, and concerns about the fiscal position here in the UK and the parallels with the budget deficit with that in Greece. So I think we've been somewhat oversold. I think now we've seen a slight element of reassessment as far as the situation is concerned. I think there is still going to be a lot of bumps in the road between now and the election itself, and only assuming we get a positive result, i.e. one party with a manageable majority, will we then get a more durable rebound in sterling. So it's going to be a very bumpy ride, and with public finance numbers again probably revealing the state of or the weak state of UK public finances, sterling gains may well prove to be certainly checked in the short term.
Is it necessarily a bad thing if there's a coalition government? We've seen all the evidence that, elsewhere in countries, sometimes, coalitions can keep debt low. I mean, is it necessarily a bad thing?
Well, that's true. There are lots of coalition governments across Europe, and that's not suggesting that they're weak governments and unable to control their finances. I think the problem, as far as the UK is concerned, is the system is set up and designed to have one party in control. And, of course, we've only had one recent experience in the modern era of a coalition government or a lack of a credible election result. And that was 1974. That resulted in another election quickly. And, of course, that was not long before the IMF came in. So the historical precepts are not that great.
Rabobank's Jeremy Stretch, thanks for joining us.